Here's something that should make you pause. Over 250,000 U.S. jobs just disappeared. Not lost, not outsourced, revised out of existence. In May and June, we were told the U.S. added nearly 300,000 jobs combined. That sounded healthy, even encouraging. But weeks later, the government quietly came back and said, "Oops, our bad." May's number? Down from 144,000 to 19,000. June? From 147,000 to just 14,000. That's a huge revision, one of the biggest two-month corrections since 2008. So, what's really going on? If you strip out healthcare and government jobs, the private sector actually lost jobs this summer. And historically, that's a red flag. Because before every recession, from the oil shocks of the 70s to the 2008 crisis, unemployment ticks up first. Now, right now, the unemployment rate sits around 4.2%. That's not panic territory yet, but when the job market adds less than we need just to keep up with population growth, it signals contraction. And that's why this revision matters. The Federal Reserve relies heavily on these job numbers to decide interest rates. If they thought the job market was strong, they had reason to hold off on cuts. But if those numbers were wrong, they may have held rates too high for too long. So, what caused the miss? The official explanation? The Bureau of Labor Statistics just got more data. Every month they collect info from employers and adjust as needed. But these weren't minor adjustments. This was a data earthquake. And the two big culprits behind the revision? 1. Seasonal adjustments, statistical models that try to remove noise from holidays, weather, school calendars. Helpful in normal times, but 2025 is anything but normal. Remote work, automation, immigration policy, and tariffs have all distorted the labor market. 2. The birth-death model. No, it's not morbid. It's a guess at how many businesses are created or closed each month. But it's just that, a guess. In today's high-interest rate environment, more businesses might be dying than being born. That means the model could be adding phantom jobs that don't exist. And this is where politics steps in. President Trump didn't just call out the BLS, he fired the commissioner. He claims these job numbers were intentionally inflated to help Democrats during the election. And now they're being artificially lowered to sabotage his presidency. Whether you agree or not, it's turned raw economic data into political fuel. Left-leaning media called it a meltdown. Right-leaning media said he's restoring integrity. The truth depends on your filter bubble. But here's what really matters for your money. If the job market is weaker than we thought, the Fed must cut rates. Wall Street knows this. The CME Fed Watch tool shows a 90% probability of a rate cut coming soon. Bottom line, whether this was a model error or political sabotage, the result is the same. The tools we use to measure the economy? They might be broken. And if they are, we're flying blind. This has been your shot of biz, finance, and motivation.